Markets, they trade higher amid conflicting signals on the chance of a truce in the China-US trade dispute. In terms, that's basically the broad headline that we're getting early this morning. The Nikkei now is holding with a gain of close to around 0.5%. Just look at the dollar yen. The yen has shown some strength. Actually, it isn't very, very great news for an export-oriented economy out there, because that has strengthened from around that 113.5 odd all the way to 112.7. So keep an eye out on that front. There has been some weakness on the dollar index, and that's what's reflecting as well, because the yen has shown some strength. We got some data as well coming in from Japan. The October trade deficit came in at around 449 billion yen. That compared with the Reuters poll of around a 70 billion yen deficit. So that was another data point we got in from there. But otherwise, more green ticks is what we saw in terms of the Asian markets. The Kospi opened higher with a gain of around 0.2%. Now it's up close to around 0.3%. From all those Asian markets that have opened up, the Straits is the only one that's opened up with a bit of a negative tick. But the SGX Nifty for starters is saying maybe a 45 to 50 point bump up is what we could get just to kickstart trade. Remember, the crucial Q2, though, will be what happens in terms of the Reserve Bank of India board meet. So we'll keep an eye out on that front.
Okay, well, let's tell you about the U.S. markets then. U.S. stocks closed mostly higher on Friday after comments from the President. Donald Trump once again sparked hopes that a trade dispute with China could be resolved in the near term. The Dow Jones climbed over 100 points. S&P 500 was up around 6 odd points, while the Nasdaq was in the red, led by losses in technology shares. CNBC's Josh Lipton gets us a wrap of all what took place on Wall Street.
They posted big declines for the week, the Dow adding 123 points, the S&P up 6, and the Nasdaq lower by 11. Shares of Nvidia tumbling 19% after reporting a miss on revenue in the third quarter. Company also delivered lower than expected guidance for next quarter. The news also weighing on shares of AMD, one of Nvidia's big competitors, those shares down nearly 4%. Meanwhile, Airbnb releasing info on its revenue for the first time in the company's 10-year history. Property rental site saying revenue topped more than $1 billion for the third quarter, with a source telling CNBC that the company is on track to be profitable for the second straight year. Airbnb could go public as early as next year. And a disappointing start to the holiday season for Nordstrom. Shares of the retailer sliding on Friday after the department store chain reported disappointing earnings late Thursday. Nordstrom delivered weak full-year guidance and showed slowing growth in foot traffic at its namesake stores. The stock posting its worst week since 2008 and its worst day since May 2016. That's the action from the U.S. market. Now back to you in Mumbai.
On that note, then, let's get in some opinion coming in from Ben Medell of JP Morgan on the U.S. markets as well as on the economy.
I think the good news is you do get some relief on both those fronts. On the China front, some relief from Fed tightening, but you're only going to get that next year. I think we have to keep our eye focused on the big picture, which is that we're navigating a period of slowdown in the global economy. So global growth went down to trend very quickly. We're navigating a deceleration in the U.S. economy from 4% back down to trend at some point next year. And it's hard to get bullish, and very bullish in particular. Recession risk is still low, even against the backdrop of that decelerating economy. And so we reserve the right to become more bullish in the future here. We don't think it's over. And so we reserve the right to become more bullish in the future here. We don't think it's over. But you want things that hedge against the key risks right now. You have growth shocks just coming from the data that we're seeing. You have potential inflation shocks. You have policy shocks. All that suggests a bit more balance of an approach between equities, duration, or bonds, and cash.
Okay, well, let's move on to a CNBC TV 18 exclusive then. Steve Leisman caught up with Richard Clareda, who is the Vice Chairman of the Fed Reserve, to discuss a host of issues impacting U.S. markets. Here's a snippet of that conversation.
Steve, I don't think there's any clear signal. It's hard even after the fact sometimes to attribute any given move in markets. Year to date, stock market is up and there's some volatility. So I think right now there's no clear signal that I would take from it.
We have several people who are coming on our air these days saying that this is the result of the market thinking the Fed is going too far, too fast.
Well, first of all, Steve, the Fed began hiking rates almost 3 years ago. And so it's been a very gradual cycle. The economy this year is growing north of 3%. Unemployment's at a 50-year low almost. And so I think also right now, you think of the policy rate that we set, the federal funds rate is now just barely above the rate of inflation for the first time in a decade. So I wouldn't agree with that.
Do you see any signs that the economy is slowing? I mean, you've been raising interest rates for 3 years. Yeah. Is it having an effect in slowing the economy?
The economy this year, as I said, is going to be growing at a pace we haven't seen in a decade. Going forward, you have to look at a lot of trends, including the global economy, I think, is something they have to pay attention to, some evidence that it's slowing. So I don't see that now, but I think broadly, we're going to set a policy that we think will help us achieve the mandate given to us by Congress. Got a strong labor market. We want to keep that, and we want to keep inflation around 2%.
November is right around the time you start thinking about forecasts for next year. Can you give us your outlook for next year, both when it comes to interest rates and when it comes to growth?
Thank you, Steve. The Fed will be going through our forecasting round at the December meeting. I don't want to front run that.
Of course,
exactly.
Yeah,
but in terms of rates, I think it's important to note that, as I've said, this process has been very gradual. I think that served the Fed well. If you look at the SEP projections that we released in September, they showed a range of views on the committee for continued adjustment next year, some officials seeing 2 or 3 hikes. And what I want to emphasize, Steve, to you and your viewers is, at least from my perspective, we're at a point now where we really need to be especially data dependent. The economy's doing well. We're looking for signals from the labor market, from inflation, to get a sense of both the pace and the destination for policy. So this is very much in data dependent mode right now.
Is that a shift from where we were? Were we at a place where it was kind of like we needed to get rates up?
Exactly.
And have we now reached the point where we can, I guess the best thing is sort of come through the woods and then sort of take a look around now?
I think you said that very well. I wasn't here 3 years ago, but 3 years ago, under Chair Yellen's leadership, the Fed decided that it was time to get away from zero. And I have to imagine that everyone around that table agreed that ultimately rates needed to be above zero. Those are emergency interest rates. And so I think in that point, data dependence was perhaps a little bit less relevant because there was full agreement to get the policy rate up towards a more normal level. As you move into the range of policy that by some estimates is close to neutral, then with the economy doing well, it is appropriate to sort of shift the emphasis towards being more data dependent. I think Chair Powell the other day made the analogy in Dallas, about if you're in a dark room, especially without your shoes on, you want to go a little bit slow so you don't stub your toe. So I think that data dependence makes sense right here.
You said move into the range.
Yeah.
Are we at neutral now? How far from neutral are we?
Well, as you know, as a student of the Fed, Steve, we plot our long-run policy rate projections 4 times a year. And as of September, the long-run neutral policy rate by members of the committee was in a range of somewhere between 2.5% and 3.5%. So currently, the policy rate is below that range. But as you can tell, it's getting closer towards the vicinity of that range.
Well, turning our attention to the European markets, then they ended lower on Friday amid the political turmoil in the UK over Brexit. Now, the banking index, that declined as investors worried about the UK crashing out of the European Union without a Brexit deal. So on the back of that, we had the FTSE was relative underperformer from all the 3 frontliners. The CAC and the DAX more or less flattish, the FTSE ending with a cut of around 0.3%. But we have been talking about the Indian markets having a rally from around that 10,000 mark to around 10,600 odd. Keep an eye out on some of these emerging markets because there's a bit of a global party going on out there. The Brazilian index, that was up close to around 3% in Friday's trading session, while the Russian index as well eked out some gains, up close to around 0.3%.
Okay, well, let's tell you about the currency space then. The dollar index has weakened on the back of cautious comments coming in from the Fed Vice Chairman Richard Clarida about concerns on the global outlook. The dollar also weakened against the pound on concerns over Brexit. The yen, the Japanese yen, meanwhile strengthened against the dollar.
And in the world of commodities, then crude oil prices gain on expectations that the Organization of the Petroleum Exporting Countries, that's the OPEC, would cut output on December 6th meeting in Vienna.
Okay, time for a quick break now. But up next, all the cues and news you need to watch out for in trade today on the other side. Quickly tell you how the Asian markets are doing. It's mostly in the green for the Asian markets. So, for example, the Nikkei is really powering ahead amongst all of the indices. So, up around close to 100 odd points for the Nikkei. And there is some amount of global uncertainty with regards to Brexit as well as the trade tensions. But nonetheless, overall, it is largely a green picture for the Asian markets. The SGX should come up for you because we have a lot of cues working for us in terms of our market specifically. So what we would be watching out for would be Brent crude, not move too much. It's within that range, still not at 65, but currently at around 67.5. But the RBI board meet would be the most important cue domestically to watch out for today. And we're going to get Lata Venkatesh to talk about it in just a few seconds. But that's maybe the SGX should come up for you, and we'll leave you with that. We, in fact, do have Lata with us to tell us what we can expect from this big meeting, which is just going to start in a couple of hours. Lata, morning.
Good morning. Well, going by the way in which news agencies and news reports have come, and our own report, that the government may want to empower the board. At the moment, the board is largely ceremonial and advisory. I mean, look at the kind of members it has. It has N. Chandran, Bharat Doshi, and Dilip Sanghvi. They are not people who can tell the governor what interest rates should be set or how exchange rates should be managed. They would be conflicted. So for the first time, the government is trying to ask the board to empower itself with more regulations. We will have to see. If it's beyond a point, obviously the Reserve Bank will balk at it. That could be the first bone of contention. The second would, of course, be more substantive issues like liquidity. This is something on which probably some meeting ground can be found, because the Reserve Bank has already done 40,000 crore of open market purchase of bonds, which means you push in money. 40,000 crore in October and 40,000 crore designed for November. And I think there'll be meeting ground. Even the repos, they're giving longer term repos so that market participants are secure. Okay, I have money for 56 days. I have money for 28 days. They've already done, and they can, easily middle ground can be found in this. The other issue on which they are unable to agree is PCA, the prompt corrective action rules. I don't know how much the Reserve Bank can give in on that, because I don't know if you'll remember the second quarter numbers of many of the PCA banks are quite disastrous. With this kind of the latest number, I don't know how much you can allow for easing of the PCA rules. The next one would be the package for SMEs. The package for SMEs, I think they will easily be able to find middle ground, because forever the Reserve Bank has allowed one-time restructuring or, allowing NPA classification for 180 days because of a specific period, a troubled period at a particular point in time. So there easily middle ground can be found. NBFC funding, I don't think the Reserve Bank will like it, because usually sectoral credit is not given. But, we heard KK Mistry tell us that, the NBFC crisis is behind us now. Even the need to ask for separate line of credit is not. And I think that's thinking in government as well. So there may not be too much of contentious fighting on that point. The fight really will be on this regulation by the board and perhaps on PCA and Basel rules, where the Reserve Bank will find it difficult to give in and the government may ask for more. On other areas, they will easily find meeting ground. We will have to see whether, you are able to push up the areas of agreement and play down the areas of disagreement. This is not immediately a market-moving event. For us, it is more the character of the financial sector, the character of its monetary authority. It's a long-term risk and a long-term stake that will be decided today. It's immediately, I don't think, NBFC should feel sad that no line of credit came, or there's no individual sector, I think, that will be impacted much.
But Lata, in the past, we've never known the outcome of RBI board meets.
Oh, you're absolutely right. And that's our biggest fear as reporters. You can wait forever. Often the minutes are decided and written up a good 2-3 weeks later. And one of the courtesies everyone observes is that you don't discuss what happens in a board meeting, especially one like this. So we are at our wits' end. We do hope that the government nominees, the Secretary Department of Financial Services and Secretary Department of Economic Affairs, will have a press conference merely to allay fears. They don't have to say what exactly was discussed. But, you know, that's a very big problem. It may be a nothing kind of day. Nothing will come and you just keep waiting. But if something comes and if something dramatic comes, oh, it'll be terrible. So I would rather have it be a nothing kind of day rather than a dramatic day.
Okay, all right. Thanks so much for that, Latha. Well, and remember, you can catch all the action all through the day just here on CNBC TV 18. Well, on that note, let's hear out what two former RBI governors, Raghuram Rajan as well as C. Rangarajan, had to say on the current standoff.
In a sense, the way it has evolved is that the Reserve Bank board has been more advisory in character rather than deciding on specific issues. Therefore, that is the nature of the board, and that is the nature of the way in which decisions have so far been taken. I would think that that evolution is a good evolution, and that is a way in which the relationship between the Reserve Bank headed by the governor and the board should be. Important change that has happened, which has given autonomy to the Reserve Bank of India in terms of monetary policy. The finance minister gets to know what the change in the policy rate is along with you and me. And therefore, that is an important change that has happened. Therefore, I would say in the present situation, Section 7 should not be used because it will give wrong signals. It is time for the government and the RBI to sit together in a spirit of accommodation and find answers to the problem. Section 7 should not be used now.
I worry that in the recent past, a lot of unnecessary noise has been inserted into the board deliberations, and I wonder if this is something that can be unwound or rolled back, perhaps by taking away some of the people responsible for the additional noise. The RBI is something like a seatbelt. As a driver, the driver being the government, it has the possibility of not putting on its seatbelt. But of course, if you don't put on your seatbelt, you get into an accident. The accident can be quite severe. So most drivers listen to that annoying noise which comes when you don't put on your seatbelt and actually put on the seatbelt because they know it's for their own good. And historically, the relationship between the RBI and the government has been precisely this.
Back home on Dalal Street on Friday, the Nifty ended 0.5% higher, managing to retain its hold over the 10,600 mark. The Sensex also closed 0.5% higher. Broader markets underperformed. Mid-cap stocks came under pressure, and that index ended in the red. How are we placed today, considering we have a lot of cues to work with domestically? Nigel, tell us.
Well, Ekta, what we saw on Friday's trading session was really a replica of what we saw all through the week itself, because for the week, the Nifty was up close to under %. The Nifty Bank did very, very well. While the mid-cap and the small-cap index, there was some pain out there in terms of the broader markets. A few stocks, though, that had corrected big time from the top, they've given you good returns. Case in point being an Eicher Motors and Titan. Both of them quality names. They've given you big money in the last few years. But from the recent top, we did see a sharp correction. I'll tell you what, from the recent bottom, both Aicher Motors and Titan, they have given you returns of more than 20%. So just keep that in mind. So there were a lot of winners. The market doesn't like uncertainty. There's an uncertain situation playing out in terms of Yes Bank. That stock was sold into even in Friday's trading session. Sun Pharma numbers didn't look good. That stock continues to see selling. And whether or not there'll be, some kind of a boost that'll come in for the NBFC space, India Bulls Finance as well did see some selling. The short point is the market dip is being bought, and that's been backed by strong inflows. But post the recent bounce back, now valuations are not very, very attractive. Like someone would say, well, the Nifty at around 10,000 odd was a tad bit cheaper than around 10,600, because you're talking about a Nifty EPS of around 500, 550 approximately. Then in fact, it's got a tad bit more expensive by 1x odd. In terms of the flows, well, the FIs, they have been pumping in some money, and the risk reward really is favorable. If the rupee is at around 73 and you're putting in money, and if it strengthens to 72, even if there is no movement on the index, the FIs will make money. And that's why we've seen flows coming back from around that 74, 73 odd mark. And that's precisely what happened on Friday. In terms of, the F&O space, there was some shorting that was seen on the index because the premium on the Nifty futures came down to around 5 from around 14 earlier. In terms of the Nifty bank, there was some unwinding of long positions in Friday's trading session. At the end of the day, we're looking at what did the FIs do. They bought in the cash market. In the futures and options space, well, they added more longs than shorts, but overall they're still net short on the index. But the net short positions have come down from around that 70% all the way to around 61% odd. And in terms of index options, they're buying puts. In case things go wrong, well, there is cushion on the downside. But what's telling you that maybe the upside is capped as well is because they're writing calls now. And last week, even in Friday's trading session, they wrote 3 calls for every 1 put. The PCR has moved back towards the upper end of the range, 1.64 odd. And in Friday's trading session, you're looking at the action out there. The 10,600 call writers, they unwound their position, but there is writing being seen at around the 10,800 odd mark. On the downside, the 10,600 put, that did see some writing telling you that some part of the market believes the 10,450, 10,500 mark will hold out. And that's precisely really what, the technical levels are telling you. On the upside, 200 DMA, 10,754. That's where resistance comes in. And on the downside, the 20 DMA, that's what we're looking at. That comes in at around 10,400. But the all-important cue today, and levels will become meaningless, is in fact the RBI board meet. If we hear something in market hours, then in fact expect a wild swing on there as well.
Okay, and stocks?
Stocks, well, we'll also be keeping an eye on the key monitorables that we have been looking at. Brent crude prices. Brent has moved up a tad bit from around the recent low of around 66 odd. It's holding at around 67.5 odd. So just keep that in mind. But the dollar index from around 97.5, that's come down to around 96.5. So we should get both those two rates up for you on the screen. That's Brent crude prices holding at around that 67.5. The dollar index as well, that's cooled off from around that 97.5 to 96.5. So we'll keep an eye out on the Indian rupee. Can we see a further pullback from these levels? Well, we'll keep an eye out in today's trading session. Besides that, stocks in focus. Siemens, the numbers look good. Our poll threw up an expectation of around 10 to around 12% in terms of a top line growth. It's coming at around 25%. The margins as well expanded out there. Keep an eye out on Jet Airways as well. The stock has come out of the F&O ban, so keep an eye out on that one. And the Tata Sons came out, with the clarification that any discussion with Jet has been preliminary. There's no proposal as yet that's been put forth, so keep an eye out on Jet Airways. Tata Investment Corp, you've seen a big run on the stock from around 700 to around 800, but a rather large buyback from a holding company. So 8% of the total number of shares is what they're looking to buy back at a price of around 1,000 rupees. So that one should be in focus. Dr. Reddy's, well, they've got 0 observations from the US FDA for the formulations unit. That's at Srikakulam. So keep an eye out on that stock. And finally, Syndicate Bank pref issue at a price of around 40 rupees. So we'll keep an eye out on that one as well.
Back to the big story of the day, the government and the RBI has been locked in a power struggle over a range of issues, and ahead of the keenly watched RBI board meet today, Shreen Ban and Lata Venkatesh caught up with an influential voice, former Finance Minister P. Chidambaram, and began by asking him about what he makes of the proposed thinking within the government that the RBI board should be more empowered and that the RBI should become a board-managed entity. Listen.
That is a preposterous suggestion. Nowhere in the world is a central bank run by a board. Central bank equals governor, or central bank equals the chairman of the Fed or the governor of the European Central Bank, governor of Bank of England. I've never heard of a central bank being treated like a board-managed private or public company. Besides, who is on the board of RBI? These are private businessmen, private professionals pursuing their own profession or private businesses, heading conglomerates, corporates. How are they competent to lay down central bank policy? They are there to keep a watchful eye on how the Reserve Bank is reacting to situations and responding to situations, and they can give their feedback to the government. But to say that the central bank will be run like a board-managed company with these private businessmen and private professionals voting and the governor reduced to a chief operating officer, I think it's a preposterous suggestion, a suggestion that has to be dismissed out of hand, and I can't recall any such central bank anywhere in the world which is sought to be run as a board-managed company.
You know, we heard from former RBI governors, whether it was Raghuram Rajan or Rangarajan, all of them echoing the point of view that the board acts as a sounding board. It is advisory in nature. That has been the tradition. But within the thinking of the government, their view is that that might have been tradition, but the law does not prohibit the government from providing rules to the board to empower the board members further. What is the point of law, sir?
See, a section can be interpreted, a section can be misinterpreted. When a board is given to the Reserve Bank of India, that has to be read in the context of what a board is supposed to do vis-a-vis a central bank. You can't simply read the letter of the law and interpret it literally or in a pedestrian manner. You have to understand the purpose behind a law. What is the law for? What is the institution for which the law is being made? And having regard to the role of the central bank. You can't treat a central bank like any other commercial bank. And therefore, you take the letter of the law, but understand the spirit behind which eminent people are placed on the board. That is to bring to the notice of the governor, notice of the professionals running the central bank, the various issues that concern the economy, and leave it to the professionals, the central bankers, the governor, the deputy governor, to respond to a situation. That doesn't mean Chandra and others are very, very competent professionals, but they can't decide what the policy of the RBI should be towards NBFC or towards MSMEs. They can't decide the policy. That has to be decided by the central bank, having regard to other economic indicators and the overall economic situation.
Okay. Mr. Chidambaram, considering your expertise in law, I want you to guess what are the options before the Reserve Bank. Section 7(2) says, subject to any such direction, the general superintendence and direction of the affairs and business of the bank shall be entrusted to the Central Board of Directors, which may exercise all powers and do all acts which may be exercised or done by the bank. Section 7(3) just has one more phrase, save as otherwise provided in regulations made by the Central Board. The governor, and in his absence the deputy governor, shall also have powers of general superintendence and direction of the affairs and business of the bank, and may exercise all powers and do all acts and things which may be exercised and done by the bank. Identical phrases, except for this one phrase, save as otherwise provided in regulations made by the Central Board. Now, if the Central Board were to make regulations giving itself powers or empowering committees, what are the options before the governor?
That's not the way to read the sections. Central bank is a very specialized, special institution in an open economy. A central bank can't be treated like a commercial bank. A central bank has to maintain monetary stability. The central bank in India, the Reserve Bank, has many other functions. It manages the debt of the government. It keeps the reserves of various states. So this RBI in fact, is more powerful than other central banks around the world. Central bank has to set interest rates. Central bank has to do open market operations, having regard to the inflow and outflow of foreign money. It has too many functions. All these functions must be balanced and policy decisions taken by competent, professional central bankers. Now, when you say that the second proviso says that the governor will have the powers, that means what is meant all over the world. Central bank equals governor. And in the absence of the governor, the deputy governor. So central bank equals governor. What does the first proviso say? Yes, you can make regulations for overall superintendence. You can make regulations for things like meetings of the central bank, frequency of meetings, how the agenda should be prepared, how the research should be done, what information should be brought to the board before the board can advise. But that doesn't mean, under the first proviso, the board of directors will take over the powers of the governor and they become a collective governor. I've never heard of a collective called governor. A governor is the head of the central bank, and in him alone vests the responsibility to maintain monetary stability. So first proviso can't be misinterpreted, distorted the way this government is trying to do. I think it's quite mischievous.